Hi guys, I'm trying to long euro. I wanted to create a live video. Of course, it's pre-recorded, but just wanted to show you guys how I do it. The candles are moving, obviously. A pre-recorded video doesn't have much value if you haven't seen the person that is showing you the pre-recorded video that they can trade live. So I guess I've shown you multiple times how I trade live. I've posted the live trades on Twitter, so you could guess almost that this is genuine. I haven't recorded it multiple times, but there's no way that I can prove that unless I show it to you on a stream, right? Let's see. Not yet. I have a predetermined area, but that doesn't mean that when it comes there, I'll just position myself long. That's not how it works. You have to adapt yourself to the context every second. So sometimes you think that this area will get reached like in 10 minutes, but then it will, but price will reach there in a day, after 1 day. Are you gonna act the same way? No. It depends on the day, on the hour, how it gets there, how it doesn't get there. Is there an SMT or not? So you have to check everything. That's why I have a predetermined time for price to get to this area. If it gets there sooner, I'll act differently. If it gets there later than I thought, I'll act differently again. Right now, it's just going down, so I wanted to get there. I wanted price to get there much later, around 10, 9:30, but now it's like 9:10, so it's going down in a fast way, so I'm still waiting. Because everybody right here got stopped out. Most of the people that's had long positions in this range, they're out. The people who are going long base of this area are getting wrecked. The swing traders, of course, their stop loss might be here. I'm not talking about those. I'm talking about the short-term traders. And also the move is really scary. So a scary move like this after a range like this, it makes sense that people will be really scared, right? And even those who don't get stopped out, automatically they will close the positions because they're in a big drawdown. It makes sense. Right now, most people who were long or trying to go long, they're out. But we should wait a bit for the early buyers, to get out of their positions also. How do early buyers get out of their position? I've talked about it before. That's when price will come down, then it will create a structure, any structure. But by any structure, I mean something visible, right? On 5 minutes, 15 minutes, something that has like a bit of visual, not just 1 minute candle that goes up and comes down, not something like that. Something like this, a structure. The early buyers are those who have bought this area because there was an area on the left, a POI, anything, order block, a high or low, breaker block, anything. So those are the early buyers. And also those who use limit orders, they put the limit right here, and then when price reaches it, it gets activated. Price goes up, consolidate a bit, or it doesn't, it's not about the consolidation, but price goes up, it will give them hope, and it will also make other people go long because of this structure, because of the low time frame highs or anything like that. So they will also go long. People will go long in the I don't know, in the FVGs, for example, right here, or in the breakers. For example, in this, if there's a breaker here, they will go long here when the breaker is retaken. Lots of ways to position yourself long, even the smart money ones. And when price comes back, there are also another part that they will go long. The ones that work with the origin of the move or supply, demand, or anything. There's like 100,000 of ways to position yourself long. What happens is these are all early buyers, and price will come and take them both. The ones that bought it in this area and with limit orders, or because of the anything that is on the left, and also there's because of double bottom or anything that they see in this area, or maybe because of confirmations, because this move that goes upside, it gives you confirmations, right? And we also have a reaction here. Okay, so they'll see price had a reaction, so it should react the second time, right? It should go up, but it doesn't. It will, for example, take this high to take out the shorts, and then it will go down. But this move down, which is usually huge and like a big move, right? That's when you take action. That's when price comes up without going down much. It goes down when you think it's not going to go down, right? A breakout, then it comes down and it goes up. It's just a schematic. I don't mean it's gonna happen just like this, exactly like this, but you got the idea of the early buyers. When price suddenly comes to an area, everybody that sets a limit order here or go long because of this structure right here, they will all get stopped out with this move right here. And even if you use like 5 pips stop loss, 10 pips stop loss, it will usually take it. And then it will go up without giving you an opportunity, because if it gives you the opportunity, you'll go long. That's how this works, and this is just one example. It can be different in every context. It depends on the context, on the day, on the time, and everything. But in a situation like this, I want the people who've longed this to get taken out, and then I'll take action. Some people might ask, how do you know it will go down again? What if it didn't? Right? What if it didn't? There's no what if. If it didn't, then I don't enter. Simply. It's a lost opportunity, but anytime that you're not on the chart, that's a lost opportunity. Right? there are two ways that people would go long here. One is with the limit orders, as I explained, and to move down, because when it comes down, people will try to buy, but market will still go down. And the other thing is confirmations, like this move up. It gives people confirmation. Candle closes to the upside. It gives people confirmation when it closes a candle like this bullish, and then it goes above it. They will call that a breakout. Of course, it's a very low time frame breakout. Then candle closes on 15 minutes and stuff like that. So when they see the green candles, they would go long. Before that, they're scared. They get stopped out, and then they wait. They go long again. And their stop loss is usually below the lows, it's obvious, or a bit below it. Sorry guys, I was just yawning. I woke up too early. And there's also people who will go long in the FVGs or under the lows here. Lots of ways to do it. But what I'm interested in is to take them all out. And then going up. Just like how we did here. We came down and we're going up now. But based on time, I can guess that if it comes down now, it will go up. But right here, it was the start of the 4 hour candle. That's when it usually doesn't go up. I could just guess, to be honest. I have certain models. My certain models are all time based, but except for models, I can also see the context of every day, as I've told you before. Not that I know what's gonna happen for sure, but I have a feeling what's gonna happen, and if that thing happens, I'll go long or short. I might get stopped out. Yeah, it's normal. But if it works, based on the statistics that I have, based on the data that I have, then it would give me huge rewards, right? By the way, this was the position of people, right? That's what people are doing, and I want them to get stopped out. This is not my position, right? So let's see. Let's see if they get stopped out or not. I'll make my C-Trader and MetaTrader ready, so that I could go long when it came down here. I'll go long in the worst situation possible, when everybody thinks it's not going to go up anymore and there's nothing below us to protect my stop. Okay, which is an illusion. Nothing is protecting your stop. If something was protecting your stop, you wouldn't be feeling the challenges, right? Let me go to the MetaTrader, disable the mic. I'll be back in a second. Okay, they got stopped out, right? Everybody that was longing here, they got stopped out. This low got stopped out. Now it's time for me to take action. I'll enter just a very small position right here. In a bit, not right now. Even the low is taken, I'm still not taking any action. But I'll show the position exactly with stop loss and entry. I might have multiple entries if it came down more. Like if it did this, I might even add more here, but my stop loss will be fixed and I'll target the highs and I'll hold it until here, and of course here. This would be my base take profits, and this would be my mid take profits, and I'll also have another one up here, so it might take days to reach. No rush, right? Let me disable the mic again so that I can work on going long in a bit. I'll share the exact stop loss and entry after I entered, but it will be around here. It won't have much difference from what you see on the screen right now. Okay, I entered my position. I just decided for the sake of simplicity, I'll just open one position. I won't add to it. Let's see how it goes. It's euro long, 19 lots. The entry price is 1.08128. And the stop loss is 1.07978. It's 15 pips stop loss, and the TP is okay. Now let's go. I won't change the stop loss. I won't add to the position, and my TP is fixed. I'll just use one TP. Okay. By the way, with this trade, I'm taking this trade on two accounts. One of them is a pip farm account. It's a 100k account, stage 1. So let's see if I'll pass the challenge with this trade or not. It's just this exact trade. It's gonna make me $6,000, a bit more, and $6,000 is 6k is the first target. It's the first target. I'm not affiliated. They haven't reached out to me. I haven't reached out to them. It's the first time I'm trading with them. I'm not even sure if they're gonna stay around in a couple of months. They're new, but I'm just trying them out. Let's see how it goes. By entering here, I don't mean that it's not gonna come down again even a bit more. But after I enter a trade, I don't care what's happening. It could do anything. I'm not gonna analyze the reactions. For example, if there's an FVG here and then price reacts to it and comes down again, I'm not gonna be like, oh my god, it refused to go up, it's because of this FVG, blah blah blah, I should just close the trade and stuff like that, and then I close the trade and break even and then price just goes up. That has happened to me like more than 1,000 times throughout my career, so I'm not gonna do that. I'll just wait. Okay, let's see what pound is doing. Okay, I thought pound is gonna come here. If it does that, then I'm gonna get stopped out on euro for sure. But that's okay. If you want me to show you the trades in a higher quality way, let me see. Okay, this is it. Let me make this smaller. The only way that I would doubt that this would work out or not is if it starts to range in this area a lot. If it does something like this, for sure I'm gonna get stopped out, or I'm gonna go into drawdown a lot. If it does this, it will just does another move. That's when I don't like it. But if I prefer it if it moves quickly. If it doesn't, then it's fine. But even a bit of movement would be nice, instead of just like doing like this here. If it does this, I might de-risk the trade. I do sometimes. I'll close like a part of the position just to not go into a lot of drawdown. But that will be for another video, like managing the risk and stuff like that. For now, it's just to show you guys how I cash this lows, where exactly nobody thinks that price is gonna go up. One thing that I really like about Twitter is that people will share their thoughts a lot. And this is actually, I've learned this through Twitter. Not like people sharing a strategy or something like that, but just by looking at people losing, I learned a lot. To be honest, I've learned the most through what the losses that people share. They would post something like this and then post a trade. Okay, they're gonna be like, for example, let's see. Okay. They would post something like this and then they would rise, I don't know, break of structure in this area, coming back down to the FVG, taking the internal liquidity, then they get stopped out right here. And I'm like, just like by a pip or half a pip, I don't know. I was like, okay, what did they do wrong? The thing is that I didn't just reverse engineer and check my own trades, my losses, but I did it with everybody's losses. I know how people trade, and by knowing, I don't mean that I just know. It's because I've checked every loss that I've seen on Twitter, how they do it, why they do it, why did they enter that trade, that exact trade. You see people doing something like and higher high and higher lows work really well. Break of structures work really well. You see people like like internal liquidity taken, SMT with, I don't know, GU, like GU has taken the low here, but EU didn't, then a break of structure, and they would go long right here because of the breakout, around here because of FEG, around here because of, I don't know, around this area because of breaker block, and around this area because of an order block or something, and they would put the stop just a bit below this low, the SMT low, and they get stopped out. And then they be like, oh yeah, I got the direction right. Right? No, you didn't get anything right. The direction doesn't matter. You could be wrong with the direction, but you could still make money. Let me show you how you could be wrong with the direction and you can still make money. Oh, nice. Okay. For example, right now I might be wrong with the direction and price might not go up, right? It might do something like this. For example, it's not going to do this, I'm pretty sure, but if it does this, okay, yeah, I got the high time frame wrong, but I still made money. I closed it here. Even if I didn't close it there, it could come up. I could close right here above this high, or like take profit and make it break even. Then I've, like, for example, taken $1,000 above this high, or even $100, and then it could go down again for the whole day. Yeah, I got the direction right. Did I make money? I did make money. So the direction and giving bias, they're important, yeah, but not as important as you think, especially if your entries are very precise. If the entries are precise, then even the smallest move can make you money, and you could just ignore the charts for the rest of the day. It's very easy. Nice reaction. Let me take a screenshot of the C trader. Oops. Going well. As you can see, just took a screenshot right here. 19 lots, 3k in profit. That's half of the profit target. I guess you could also share like 2 screens in the recording, but I don't know how to do that because this is my first time actually sharing my screen. Yep. I haven't changed the stop loss, even a pip, nothing. Let's go. Am I gonna take profits? Maybe, but not yet. Even above this high, I'm not gonna take profit because I know the high time frame is gonna change. I know it right here, so that's why even if it comes down right now, I'm not gonna close it in break even. The rules for breaking making the trade break even is very precise in what I do in my models. I don't do break even when price moves away from my entry. That's when price will come back, take you out, and then it will continue the direction. That's why I don't do break even very quickly. Even if it moves like this, I'll wait. That was the screenshot of the MetaTrader. I'm doing it on 2 accounts, so for a second I wanted to say I hope it goes well, but actually I don't hope anything, it's gonna go well. That's how it works. If it didn't go well, then it doesn't, and if it did go well, then yeah, then I like it. That's it. The point is that you're gonna get stopped out at any minute. It's just it's very, I don't want to say it's random because it's not random, but it's very hard sometimes, and sometimes really easy. The whole point is, when it's easy, you have to capitalize on it. When it's easy, it means that's your A plus model, right? Or A plus plus. I have an A plus plus. That's when it's easy, right? And that's when you have to capitalize on it. But sometimes it gets really hard. It gets like, sometimes you just look at the chart and it doesn't make any sense. It doesn't make any sense. That's when you have to stop. You have to not overtrade. For example, I guess you saw my trades, the live trade I put on Twitter. I always share my live trades on Twitter. Not always, but usually. Sometimes there is no stop loss, rarely, but usually there are stop losses and take profits and entry, just like this. I'll put it on Twitter just for fun. Then I get stopped out sometimes, and sometimes I hit TP. But the whole point is that yesterday I posted the trades. I said it's low probability, it might be slow even if it works, so I'm gonna risk small. And then I got stopped out, right? What happens when it's low probability? That's when you don't re-enter again. You don't re-enter the trade. You risk small. You do break even more quickly. You take more profits, and you don't enter again. You hit stop loss. That's it. You go and you continue what you were doing outside of the charts. But when it's high probability, you see that your model is exactly working out. That's when you might re-enter again. You might not do break even very quickly. You might take less profit actually, but you could also do like bigger positions and taking profits aggressively. Yeah, you could also do that. I sometimes do both. Sometimes I'm taking profits a lot. Sometimes I just wait. I don't take profits very quickly because, and there's a reason for that. The technicals can affect the psychology. The psychology is created by the technicals, and the technicals are created by the psychology. It works in both way. Okay, at the same time. You can't just like ignore the charts, go and become a monk, make your psychology stronger, and then come back after a year and then trade like you know everything, like you don't feel anything. No, that's not how it works. You have to make the psychology and the technical better at the same time together. Okay, every day. About the taking profit, for example, if I want to give you an example, when you take profit really quickly, okay, for example, I'll close the position right here, right? I'm in like 3k profits right now. How much? 2,800. I could close right here. Then price does this. Okay. I'm gonna be like, okay, I wanted to close here. Why did I close here? Because 3k is enough. Yeah, it's enough, but I could actually make more, right? I have to stick with my initial plan, and the initial plan should be logical. It shouldn't be irrational. And what happens is that when you do this, it will affect the next trade. Then the next trade you won't close. It's a lower probability trade. You have to take profit and close sooner, because you see that it's not doing that well. You're not gonna do it because of the previous trade. The previous trade could make you like another 3k and you lost it. That's why you want to make it up in the next trade, and then the next trade is gonna be awful because of that, because of the psychology, because you were scared in the previous trade and you closed soon. So you don't get scared. You enter. Even if it moves like this suddenly to your entry, you don't get scared. It doesn't matter what it does. After you enter, you just look at the chart. You wait for this or this. Okay, not here, sorry. Stop loss or take profits, nothing else. Stop over analyzing after you enter. Over analyzing after you enter a trade makes you feel like you know what you're doing. It makes you confident. It will be like, okay, this is the breaker right here. It shouldn't go down. Or like, okay, this is the breaker. It shouldn't go down. If it did, then you will be like, okay, this is the FVG. It shouldn't disrespect this FVG or the CE of this FVG. And then when the FVG also gets disrespected, you're gonna be like, I don't know, this is like anything you call it, the origin of the move, anything. I have that there, so it should go up, and then your next area would be the low. You're gonna be like, okay, it will take the low, and then it will go up. It will take the liquidity and then up, but then it doesn't even do that. It will just go down. So over analyzing right here just makes you feel like something will protect you, something will take the price up again. And you could be right with any of them, and you could be wrong with all of them at the same time. You never know. When you know, that's when it suddenly doesn't work. And when you just let go, it works. Yeah. I'll make the microphone disabled now. Just let's stop yapping. Not stop yapping and see what's gonna happen. It's going well till now. Um, I still haven't done a break even. I won't do it. Not right now. Let's see what's the reaction after this small breakout. It's a 1 minute, but it still counts for me. Did you see in this area how it worked out so well before just happening? I explained the early bias, especially this move. It will usually be very aggressive because they want to scare you. Not that they push a button right here just to scare you, but that's how it works. Scaring you will make you go out of your positions, and that's when it will go up without usually coming down that much. I guess you remember how I explained it. This live trade might take a lot actually. I don't know. It might just come down now and then just not go up. I don't know what's gonna happen, to be honest. But I hope it finishes soon so that I can just post it, you know, and it will take less on my hard drive. This would be a nice target. On one of my accounts, I'm not going to close it actually, on the MetaTrader. I'll close most of it right here before reaching this high, but I don't know how long it's going to take. I'll also take profit, so if it didn't reach here, I'll be okay. Don't worry about it. Going well. 4,000. Haven't touched anything yet. You know, if I want to talk about structures, okay, one thing that's really important is that everybody uses structures, and a structure is something that is visual, right? When we talk about a structure, it means there is something that is holding something, or it's held on a place, or it's something visual, right? It's made of something. So, and it's holding itself somewhere, right? When we have a structure, people will see it, especially when there is an empty canvas, right? When there is an empty canvas, there's nothing around it. You will see some points in here. This point, this point, this point, this point. And there are areas that you don't pay attention to. You don't pay attention to here because there's nothing here, right? But then if I draw something right here, you'll notice it. You're gonna be like, oh, what is this here? What is this red dot, black dot? It's like the analogy that they use. They're like, I remember in the anime Naruto, Jiraiya was telling Naruto that if this is a white paper, Naruto, the main protagonist in the anime, Naruto wouldn't notice anything in this empty paper, in this white paper, right? Nothing. You don't know where to look at. If this is a paper, you don't know where to look at. You'll look at everywhere. But then, if I put a dot here, right? That's not a dot, but a circle. If I put a dot here, and if I show you this paper, this white paper, where are you going to look at? You're going to look at this dot. Your attention is going to be focused on here. So that's why when there are structures, people will look at those structures and will notice them and will try to trade based on them, right? If there's an area right here, there's small areas, structures here, 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 here. That's how people developed the idea of a resistance. Price hitting somewhere. Where? Not the thin air, but this area here, right? That's how they say there is a resistance from this area, not letting price to go up. And then when it goes up a bit from from this area, they're gonna be like, it was a fake out. And then they'll use this area again next time to say that there was a resistance. So the eyes are really important. That's how everybody trades. Everybody trades what they see, and there is no way to go around this, because in the empty areas there's nothing. But you want to win, you want something to hold price for you, right? That's how you'll be focused on these structures. And if you're focused on this, you'll get stopped out a lot. I'm not saying you're not going to make it. There are lots of people, I guess, I don't know, I haven't seen much, that are using like support and simple resistance, and it's working out with them. But for me, it doesn't work, to be honest. The way that I do it is I wait for people to get stopped out in these areas, in these structures. And it's sometimes objective. For people, when they see it, it's objective. They're like, okay, you wait for this, for this, for this, you wait for, did you traded this because it went below it, people got stopped out, stuff like that. It gets a bit subjective, and it's different for everybody. I can make it objective. It's actually objective for myself. I can explain it in very detail. But if I want to be simple, okay, if I want to be simple, just to tell you how it works, I don't do like liquidity sweeps and fake outs and stuff like that. If price does this, I'm not gonna long in this area or long the reaction. I want something tangible. And you know why? Because I want everybody to get stopped out. People are still in position in here. If they had a long in this area, their stop might be here. Okay, they're not stopped out yet, and they're not scared yet because of these reactions. They think that price will come back and it will hold for the third time, right? Or it might do an SMT and it might go up or something like that. Or they might also stop a bit, right? It will come close. They will move the stop to not get stopped out. And the stops are usually not 1-2 pips. They're more than 5. They're generally 5 to 10 pips stop loss. Okay, as far as I've seen. Not the swing traders, but the short-term traders. So what I really want is something scary. I buy scary, okay? And I sell hope. This is when I will buy, if it does this, right? If it does this, then everybody in this area is out and scared. And they usually don't see anything. Don't see anything in this area that could hold price. This is when price will do something like this on low time frame, and then it will go up without coming down much. This is when I want to buy. This is when nothing makes sense, when there's nothing to hold price. And where do I put the stop loss? I'll talk about that later, but this is what I like. And this is just a random drawing. I don't mean this is gonna happen or something like that. Don't care about the structure right here. But I guess you get what I mean. Now let's go back to the trade and see what happens. I don't even know where are the candles. Okay. Not bad. Let's see what's gonna happen. I remember the days that when price was moving, like even in smallest move possible, I would just like freak out. I would truly freak out. With this move coming back, I would be like, oh my god, I don't want to be in this trade anymore. With this move coming down, I'd be like, oh my god, I just lost $1,000. What if it comes back to entry? What if it goes to my stop loss? It's very hard to control those emotions, to be honest. But there's no way to do it unless you control them. And you control them by practicing a lot, repeating a lot, losing a lot. I've lost a lot throughout the years. I don't know, I've lost more than you can count. More than all you can count. And that's how I'm confident, even when I'm just almost getting stopped out. Because I don't care about the losses anymore. Because the losses are small for me. Usually. Especially when I'm not on a prop firm account. When I'm on a prop firm account, it depends on the account. Sometimes some accounts I might even risk 3%, and on some accounts that I'm conservative, I might risk like 0.5%. So it's really different. But on my personal capital, it's very small. Stop loss, when stop loss is small, the risk is small. When the stop loss is huge, the risk is small. It doesn't matter, risk is small. So even if it comes back to my stop loss, I don't mind it. It's okay. I posted about the recording right now on Twitter. So I guess a bit ago. So I guess I won't be able to not post it if I get stopped out. But yeah, let's see how it goes. It's not that bad now. It's a bit slow, and when it's slow, you might get this, but it's fine. Let's see how it goes. About the trades, I don't know if you can hear me right now. Let me write it. Can you hear me? I guess you do right now. So my take profit is not here on pip farm. I mean, pip farm has a kill switch function, which you can also use it to take profits. As far as I know, you can set the kill switch to any price that you want, and it will close the trade, all trades, on that price. So I've set the kill switch to get activated when the account reaches the profit target. I don't know exactly, but I guess it might be around this area. So it might get closed a bit earlier. But on the other accounts, on MetaTrader, I'm gonna keep it open, even if it reaches here and here. Let's see how it goes. I'll take profits on MetaTrader above here, just before getting here, but then I'll let it be. I'll let the rest be there for this high, but I don't know if it's gonna get there or how long it's gonna take. But yeah, the perform account, it's gonna get closed before this take profit.